What's up everyone, I am Louis Leyva and this is Culture Estate. Thank you for joining me today, and in this video I'm going to teach you how to find a great deal on a property even in this crazy real estate market that we're in. I'm going to teach you the secrets that I use, I'm going to show you the systems that I use, and I'm even going to take you on the road with me to look at 3 properties that I recently just saw. But before we get started, please give this video a thumbs up and consider subscribing to the channel. You know what? Don't consider, just subscribe to the channel. And now without any further ado, let's get started. So this is house number 1. We're going to be looking at a duplex property here. We want to be really careful here because this neighborhood is a little bit on the rough side. So let's go ahead, let's keep our fingers crossed and go inside. Just make sure there's nobody in here. Hello? Hello? All right, I think we're okay. Okay, so the property wasn't that scary, but what was scary is the condition of the inside. So let me walk you through the property to show you exactly what to look for. As we walked through the property, we saw the brown tile with the matching disgusting brown carpet. The windows had to be replaced, and then looking at the bathroom, we noticed that the vanity was in decent shape, but the inside was rotten to the core, just like some people. Not you if you're watching this video. The bathtub was completely disgusting. I wouldn't bathe my kids in there, and I hope you wouldn't either. The kitchen looked decent, but then once we took a look at the stove, that has to go. The vent was all rusted out, and it wasn't venting anywhere. The pad in the garage was cracked due to settling, and then we looked around the property and the landscaping was going to cost us several thousand more dollars. So always check on that because most people leave that out of their budget and it's going to cost them a lot in the long run. So we have a 4-unit property here in Fort Myers, and what you have here is basically 4 small little apartments. Some of them have 1 bedroom, some of them have 2 bedrooms. I want to walk you guys through here to see what kind of an option we have here with this property. Now we want to be very careful here because there might be some, it's been boarded up for a while, so there might be some animals or hopefully not any homeless people up in this place. Hello? All right, so now let's take a look at this unit here, see what we have in our hands. Whoa! Hello? That was just the wind, but you gotta be careful when you come out to these properties. Luckily, I've got my cameraman in the car, but if you're by yourself, you gotta be careful. Do always do the buddy system when you go into these vacant properties. Okay, so that was a close call, but now I want to walk you through the property to show you exactly what this 4-unit property has to offer. So all the units are basically in the same condition. We have 3 2-bedrooms and 1 1-bedroom. The bathrooms are small, but they do have windows for peeping toms. The floors are completely wrecked, so we need to redo them, but the good thing is that they're on concrete slabs, so it should be pretty easy. The kitchens are small, so if you have a tenant that's going to need double ovens or a sub-zero refrigerator, this ain't going to be the place. The yard was small, but it did have a lot of landscaping to be done, and it still had some fallen trees. But the one biggest thing that I worry about with this property is that somebody threw up the white flag and gave up. But any property could be a good deal if you crunch the numbers right. But for now, let's go ahead and check out the 3rd house of the day. All right, so we're at property number 3, and as you can see, we have this body of water behind me. And I want to show you that you don't just have to buy rundown properties in order to make a good profit or get a good rental. Wow, this place is nice. It's renovated. It's got this is not the furniture comes with it, but staged really nicely. This has got a great presentation. Very nice. You don't always need to have a house that's run down. You can actually get a house that's turnkey, and sometimes those are your best investments. There's been some properties I purchased that don't really need any work at all, and they have been the best properties I have ever bought. No headaches, nothing. And this seems to be like a potential. This is a 2-family. So what I'm showing you on this side is going to be exactly what you're gonna see on the other side. I've never seen this before. Laundry room. Look at that, laundry room outside. Outdoor laundry room. I'm in a, whatever it's called, lanai. This is beautiful lanai, by the way. Yeah, I've never seen that, laundry room. Nicely staged. Oh, the master. This is a nice master. This bathroom is insane. Beautiful. Nice shower stall. Humongous closet, private pooper. You gotta love that private pooper. Now let me give you my thoughts on this property. So this side of the property is not as renovated as the other side, but it's still in great condition. The bathrooms are a little bit dated and they've got this 80s vibe about them. So if you want top dollar for it, you're gonna have to renovate those as well. The view from the yard makes it look like you're on vacation, but the craziest thing about this entire property is the fact that the basement is finished with an in-law suite. And that's not such a good idea, not because you shouldn't be living with your pain in the butt mother-in-law. I'll tell you more about that in just a second. Now the garages are independent for each unit and they're huge, and they even have a workshop off to the side. But my absolute favorite part about this entire home is the fact that it sits on a little inlet and it has a dock in the backyard where you can leave your canoe and you can even go out there and go fishing. I could see myself back there with my dad just fishing all day. It would be a lot of fun, but that's the same reason why I think that this property may be dangerous. And that's because if there's ever a hurricane, that water level is going to raise tremendously and it will wipe out anything that's on that ground level. I don't even know if there's an insurance company that would insure anything on that lower level because it didn't look like it was meant to be finished. But I still like the property a lot, so let's keep it on our list until we crunch our numbers, and that's what we're going to do right now. So which one of the three properties do you think is the best deal? Which one would you invest in? Leave it down below in the comments. I'd love to hear what you guys have to say. Now let's see what the numbers have to say about the three options that we have on the table. As you can see here on the screen, we have laid out property 1, property 2, and property 3, what they're listed at, what their list price is, what's the gross rental income, the taxes, the insurance, the maintenance on each property. They don't tell you what the maintenance is most times, so I just factor 5% of whatever the total income is for the property. Then we have the total expenses for taxes, insurance, and maintenance, everything we just described. We have the style of the home, how many days it's been on the market. That's important because if it's been on the market longer, you have more negotiating power. What the cap rate is currently, the cap rate is the capitalization rate. This is a percentage that tells you how long it's going to take to recoup your investment if you were to buy it cash. There's another rate called the cash on cash return, but that's a video for another day. Then we have the net income, which is after all you've taken out, all the expenses, this is what you're left with. And then based on what we want to make on each property, this is what our offer price would be. So I didn't plug in the offer price. The offer price is actually a formula. It's actually 10% for some properties and as low as 7% for some of the nicer properties. What I mean by that is if I'm looking for a 10% return on my money, a 10% capitalization rate, then that means in 10 years I'll be completely paid off. The property would pay itself off because of the income it's generating after all the expenses. So if I'm looking for a 10% cap rate, what I need to find out is how much construction does it need, because I got to factor that in as well. So for the first property we saw, I'm factoring in about $15,000 in construction. So that means that I can offer $184, $190. So $184, $185,000 I can offer on that property, and that would get me a 10% cap rate with all the other numbers that we plugged in. If you want yourself a copy of this calculator, let me know down below, send me your email address and I'll send it to you guys as well. The second property is actually telling us that we should be offering $250,000 because I calculated there's probably about a $40,000 renovation budget on there because a lot of the major stuff has been done already. So that would bring us down to $250, and it's currently listed right now at $310. And then the last property, property 3, we're not going to try to get a 10% cap rate because that would be just out of this world. In the nicer areas, places that are very, very, how would I say, affluent or very low turnover, the tenants don't leave that often, you're not going to see as high as cap rates as you will in the inner cities or in the rough spots, because these are considered more like blue chip stocks, which you end up having to pay a premium for. Same thing goes with these types of properties. So with this one, I factored in a 7% capitalization rate. So if I factor in a 7% cap with no construction that needs to be done right now, it looks like the offer I should be making on the property is about $476,000. So what I added, as you can see right next to it, is the score. The score means the higher the score you see here means that the closer I am for the offer I need to make to the price that they have it listed at. So for instance, if I want to make an offer of $250, I'm already 80% there. Now, if these numbers don't work for you and you can't get it somewhere close to these numbers, then don't do the deal, guys, because it's not about how many deals you do. It's about how many profitable deals you do, so keep that in mind. Now let's talk about how we can get ourselves some off-market properties, because those are the ones we're gonna be able to steal and get much better numbers on. So I've been investing in real estate for almost 20 years now, and one of the things I'm gonna tell you is that you're only gonna be as good as your systems. The system that I've found to be the best and quickest way to get information, data, and phone numbers, contact information, is Propstream. Propstream is what I'm going to show you right now, and the simplicity of using this is second to none. So let me just hop over to the screen and show you exactly how to do this. So if I'm looking, let's say within Collier County, Florida, that's where I am. You can even type in the city if you like that better. And once you do that, you're going to see this. You're going to see there's 7,331 properties on the MLS. There's 403 pre-foreclosures. Those are homes that are going to be short sales. You have 14 auctions, which means properties that are scheduled for auction. You have 355 bank-owned properties. You've got 62,000 cash buyers. You've got 2,861 liens. And these are properties that have either tax liens on them or liens for not cutting their grass, whatever the case may be. There's 5,245 vacant properties. And you've got yourself 221,000 high equity homes. These are people who have a lot of equity in their home and they can sell their home for a little bit cheaper. So all you have to do is this. This is so easy. Let's say I wanted to get myself the liens, and you know what? Let's go with pre-foreclosures. This is a smaller list. Let's just click on pre-foreclosures. It's 403 properties. All you have to do now is the following. You go here, you click on 403 unique properties, you add it to the list, you create the list. I'm going to call it here test, so you guys can see. We create a new one, save it, and once it's saved, we're done. That's all we have to do. Then once we have that, we go here to our properties. We're gonna see our list, and now we can just export our list, or if we don't wanna export it, we can just leave it here if we'd like, and we can send this data off to Propstream so they can skip trace the numbers for us. Just remember, always check the numbers against the do not call registry so you don't get yourself in any kind of trouble. So once we have our list ready, all we have to do is go down here to where it says skip tracing. We go to select contacts, and then we hit drop down, and then we pick the list that we just created, which is test. That's it. Done. Simple as that. Sorry to interrupt the video, but if you want a 7-day free trial to Propstream, check out my affiliate link down below. The last method I want to show you is how to find properties that are actually going to sheriff sale, because those could be tremendous opportunities for you. Right now, there aren't a lot of counties and there aren't a lot of states that are actually even going through with sheriff sales, but there will be a day in which sheriff sales will come back. And in this video, I'm going to tell you very briefly how to get your hands on some juicy, juicy sheriff sales. So let's go ahead back to the screen and I'll show you what to do. Every area is going to be different. So the easiest thing for you to do would pick the name of your county, which here it would be Collier County, and then to type in the word sheriff sale or sheriff sales, whatever. And then what you're going to do is you're going to come up with this information. It's either going to be a third-party site that's going to give you the information, or sometimes the counties actually give you the information. As you can see here, there's also the county website. Some counties actually allow you to get this information for free right on their website, or you can go in person and get that information from the sheriff's sale department. If they don't have that available, then you might have to pay a third-party service. Every county, every state is going to be totally different. Some counties you can even do it online auction. Other counties you got to go in person, so it's going to be different anywhere you go. The important thing for sheriff sales is that you have to do all your research before you go to the sheriff sale or before the day of the sheriff sale, because once you do make an offer, you're going to have to provide 10 or 20% or sometimes even the entire amount of the price of the home that day, and you don't get it refunded for many reasons. So make sure you do your homework before you go, because going to the sheriff sale is the easy part, but trying to back out is going to be next to impossible, and you don't want to lose your money. Now, if you want to invest in real estate, but you don't have all the money available right now, check out the video on the screen where I teach you how to invest with as little as $100. You're not going to want to miss it, so click on the screen right now.